How's it going? It's Rocky. Welcome to week number 18 of the $2,000 weekly challenge. Before we get started, please check out the timestamp on the description below so you're able to jump to the section that you're most interested in. Normally, we just do 4 sections. The first one is the intro. A second one, I do an account statement review to show the transparency of how our strategy is doing. And then our third section, I show you my best trade of the week. And the last section is our worst trade of the week. So every Friday, we release content from our experience trading the E-mini futures. Right now, it's actually about 11:26 a.m. on Friday, May 7th. I actually ended my trading a little early today, and a lot of that is because I was a bit hesitant and I was overthinking. So I decided to not trade anymore and just be done for the day. But just to show you exactly the strategy I'm using, which is, you can check out in the description below if you wanted the written description of it, or check out my previous content. But it's usually just utilizing the MACD, as you see on the bottom here, and the stochastic RSI. I do use 2 different charts, and I want to make sure that both of them are in agreement. So what you see on the left side here is a 5-minute candlestick, which is a time-based chart. And on the right is a tick-based chart, which is 512 ticks. So basically, with my strategy, it's pretty simple. It's nothing new. A lot of people use it. The one that I focus on first is the MACD. So MACD is moving average, convergence, and divergence. So essentially, I wait for the crossover. So specifically like this one here. So I'm going to zoom in a bit so you can see what we're talking about. And you can see the market moving right now. But again, you may say this is hindsight 2020, but if I were to enter, I would have entered right here about the 11:05 candle. And the reason why I would have entered in this 11:05 candle was because, let me just draw a vertical line so you can see which candle I am referring to. So that is the 11:05 candle. And essentially, this is when the crossover occurred. So it crossed above, and that's usually a bullish sign, and we are above the 0 line, so the probability of it working is a lot better. And we are on the overbought side on the stochastic RSI. So when we're overbought, I have more confidence to be with the buyers, and that's why I enter when we are on the overbought side. And my intention is to not hold it too long. So that one we could have entered maybe as low as just on the open, maybe at 34,624, or maybe as high as 34,645. And if we look at the corresponding tick-based chart, I am going to draw where 11:05 would have been. So 11:05 would have been, let's see. And again, with tick-based chart, each candle represents how many transactions occurred. So if I use the 512 ticks, then that means 512 transactions. So it looks like it would be on this 11:04 candle that would be represented on when I would have entered the trade. And if you look again on the MACD, which is moving average, convergence, divergence, you can see that based on the histogram, the lines are diverging, and we are on the overbought side. And again, the MACD is above the 0 line. So all 4 of those that I look at are all in agreement. And that's one reason why I would have entered at that time. And hey, if I entered and left it there, we could have had maybe $300-400 profit at this point. But again, that's hindsight 2020. You may ask, why didn't you enter it? It was because I've already made the decision that I was ending my trading for today. And as you can see right in the middle here, we just did one short, which gave us a profit of $140 before the commissions and fees. Now let's review the account statement for this week. So on our time frame here, it's from Sunday, May 2nd to Friday today, May 7th. So one thing I wanted to point out this week, something that my friend actually pointed out to me, and I was able to figure this out by commenting on TD Ameritrade's YouTube, is I was able to negotiate my commission and fees. So as you can tell here, for one contract, miscellaneous fees is $1.25 one way, and commission and fees is $2.25 one way. And that's pretty expensive. I mean, most people have questioned me, why don't you change to another brokerage where the commission and fees are a lot cheaper? And I understand all that, but again, I do it because I got so used to ThinkOrSwim's UI, which is a user interface, and a lot of that UI is actually quite helpful when you're trading because there's that learning curve that you have to pass, and I'm not quite ready to do another learning curve on a new brokerage itself. So what was nice about it is I reached out to TD Ameritrade, and they were able to decrease my commissions and fees from $2.25 to $1.90 one way. So that's about 45 cents. That's about 35 cents saving one way, or 70 cents round trip. So I'm happy with that. Again, I'm gonna reach out to them in a couple of months and see if they can bring it even lower, just because I am trading a whole lot more. So that's one thing I wanted to point out. So for this week, I'm glad to say that I had no mark to market. So if you look at all the descriptions here, I had no mark to market. So what that means is I was disciplined enough to close all my trades before 1:15 p.m. Pacific time. That's a issue that I had the past 2 weeks, where I was holding on too long for some of the trades, but I'm glad I was disciplined to not do that at all this week. And then, as you can tell here, client requested electronic funding disbursement. I did withdraw money. I withdrew 1,000 here and another 1,000 here, so that's $2,000, and that we will be adding to our ending cash. So basically, for this week, I am happy to say that we reached our goal of minimum $2,000. We actually had a great week. We made $3,028.60. So basically, most days were great except Wednesday. So we had, we lost about $627.50 on Wednesday. But in reality, we actually lost a lot more than that. And I'm going to review that on the last section of our content today, which is our worst trade of the week. So I do evaluate how I'm doing for the week based on essentially on the cash balance. But before we get to that, I just wanted to point out these are the two trades that may look profitable, 730 and 720. But if you look at my previous content from week number 17, you can see there that I held a trade over the weekend, and it recovered thankfully on Sunday, and that's where this recovery came from. So I don't really count it as a win. It's more of a good recovery from last week, but overall it was still a loss, but it did contribute a lot to our gain for this week. So I would say that our best trade for the week was actually a net of $570, which occurred here on May 3rd, on Monday, which I will go through. And then our worst trade was actually a loss of $1,080 on Wednesday, which I'm going to talk about on the last section of the content. So for this week, we ended at $22,480.98, but we did withdraw $2,000, so we'll add that to the ending cash, and we will subtract our starting cash here, which is $21,452.38, and that is how we came up with our net profit for the week of $3,028.60. And of course, I'm gonna put a portion of that to pay for my quarterly taxes for federal and state taxes, which is something that I always keep in mind when I'm withdrawing money. And as something that I always do every week, I like to compare this to what a normal 40-hour 9 to 5 would be in the US. That's a typical full-time work week, but with my previous jobs, there was no such thing as a 40-hour week. It was really closer to a 60-hour week, and you're always available all the time. So kind of glad that I'm doing this on my own time, and I have more freedom with my time. So just for comparison's sake, let's just compare that with a 40-hour week. An hourly rate for this week would be $75.71. So that's pretty good. It's actually a pretty good amount, that's something that a lot of folks in engineering and nursing professional careers are making per hour. So for this week, our most profitable trade occurred actually on Tuesday, not Monday. And that was an entry of 2 contracts at 33.801, and we exited at 33.858. So essentially, that's just the simple arithmetic here. 858 minus 801, that's about 57 points, and basically with each contract 1 point is equal to $5, but since we're doing 2 contracts, that's equal to $10. So from 81 to 858 for this trade that started at 7:40 and ended at 9:10, so a little over an hour and 20 minutes, that gave us a profit of $570, which is not bad. So this is, yes, our most profitable trade. Sure, I'll consider that our best trade, but really I'm doing it as most profitable trade, but it's actually not our best trade. And I'm going to show you why, but this was I was following my rules a little, but doesn't always go your way. So this is where I guess I want to say, your indicators and whatnot, they're not 100%. It just gives you a better probability of it being successful, but always ensure that you can react accordingly to it. So for this trade, it was after a pretty good big green candle here from 7:36 to about 8:01. So it's about a 70-point green candle, and I saw that as a very bullish sign. Or someone may say that's not a bullish sign, but at that time, that's what I was thinking. And when I was looking at my MACD, based on the histogram at that point, it already crossed over. It looked like it was starting to diverge. And then on the stochastic RSI itself, it was trending up. So I was seeing that there were more buyers that were coming in. And that's why I entered at the 740 candle. And if you look on the right side itself, it was also the same thing. The stochastic RSI was actually, right at the overbought area. And when I was looking at the MACD itself, it looked like it was about to cross over and start to diverge itself. So that was my bullish entry at 33.801, which actually turned out to be a painful drawdown entry that I had. I held on to it, and 30 minutes later, I had this big candle. And actually brought us down to 33.654. So I'm just going to bring the calculator here. 33.801 entry minus 33.654, that's actually 147 points. And that equates to being down, or a drawdown of $1,470. So these are the trades that makes me nervous. And usually I would recommend to try to exit as quickly as you can. This is actually a bad example or a good example depending on how you look at it, but it is my most profitable trade of the week. But the reason that I stayed was because I was long, so I have a little bit more tolerance when I'm long. And based on what I was seeing here, I had thought at that time that it's okay, I just need to be patient and you'll recover. But that kind of mentality can definitely backfire on you, and it could go the other way around and you could be in trouble. But having a little bit of cash buffer in my account, I have the, I guess you could say, luxury of being able to hold on. And that's the reason why it's important to not over leverage yourself. Don't trade your full cash amount, which is counterintuitive to a lot of day traders who are trading stocks, because they do like a huge amount of share size, so they end up always just using most of their the money in their portfolio, or even a little more by using margin itself. But anyway, a little rant about that. But I'm glad for this one, it did recover back. So really an ideal entry would have been at 8:30 here, with of course the genius of hindsight with us. So at 8:30, a crossover occurred there again. We were on the overbought side. And then if you look on the tick base chart, it actually crossed over a lot earlier than that. It's at 8:21. But if you entered at 8:30, that would still have been a great entry there. And you could actually have waited if you had the patience for that, because for that day it was actually a humongous move. where for the day it ended at 34,038. So in reality, I could have made $2,000. Hindsight 2020. But again, I tried to not have those type of commentary or evaluation of what happened in the past, because really when trading, what's important is when you got in and when you got out. What if, what could have been, and etc. Things like that. Those are the type of mentality that could really hurt your psychology and confidence when you're trading, which leads you to do some FOMO trading, which is not good. But anyway, that was our best trade of the week with a net of $570. Now for our worst trade of the week, this occurred on Wednesday, and this is actually it's painful talking about it. Why I entered this trade, I couldn't tell you. It's more just one of those where I think I was looking for a reversal. I was going with my gut instead of looking at, the candles and the indicators that I usually depend on. I mean, if you look at the MACD itself, yes, we were below the zero line, but crossover did occur. If you look at the histogram, they're definitely diverging a lot. If you look at the stochastic RSI, it's even almost flat on the overbought side. So definitely a lot of buyers there. And then if you look at the tick base on the right, you can tell that crossover occurred even way before that. And on the stochastic RSI, we were on the overbought side. So there's really no good reason for this entry. And the problem is, I think I was shocked in a way because from the night before, I had $400 in profit when I was trading the Globex. And I believe I was trying to conserve it. And that's the reason why I didn't want to let go. And because I didn't want to let go, I froze. I was in shock. And before you know it, at this 845 candle, we were already up 34,183 on the high there. And if you think about it, 34,183 subtract 34,022, that's about 163 or 161 ticks or 161 points. And that equates to being down $1,610. So that's what made it bad, but I stayed patient because what I wanted to do at that time is there's usually a bit of a drawdown or a reverse for it to consolidate a little. So I waited for that, and once I saw I was a bit of on a low there, I took my loss, and that's why 34,130 subtract 34,022, that's 108, and that's how we lost $1,080. But actually what I did there is I actually flipped long, so that's why you see 4 contracts here. So I went long at 34,130. I'm actually gonna draw a line here for our entry at 34,130. And what's again frustrating with this is for this one, the 34,130, we actually got up to about 34,218. So in reality, my loss, I recovered about, the 1,080 loss, I recovered about $900 of that. But I guess I was so stuck on recovering the whole thing that I was too shy to pull the trigger and close the contract here, which I really should have. And I know I waited for it, and that went all the way down during power hour, and I wasn't able to exit until 34,138. So a gain here of $900 that I could have had to offset the loss of 1,080 became just a gain of $80 before commission and fees. And that in itself is our bad trade of the week. It happens where I just, go on a unknown path, trying something out with no rhyme or reason, and that can be really very dangerous because, this could have been a very strong day for us if I didn't make this mistake, and our week could have been a lot better. But, it definitely reset my mindset a bit because it was a very complacent Wednesday after having a great Monday and Tuesday. And that, after this day, I was actually very conservative moving on from Thursday to Friday. So as you can see from my total from the statement review, Thursday and Friday were actually quite uneventful, but green day, which is what's important. So that is our content for the week. Hope you learned something or actually enjoyed the commentary. Again, this is, just for entertainment and informational purposes only. So please do like and subscribe if that was fun for you. But if not, please give me another chance and hopefully you learn something on my next content. All right, see you next time.